Hello, I'm Darrin Williams, CEO of Southern Bancorp, and I am happy to be joined here with my friend Jennifer Tescher, who is President and CEO of the Financial Health Network. Jennifer, welcome to Little Rock.
Thanks, Darrin. I really wish I could be there in person.
We're happy that you could join us remotely. I'm excited to have you with us, Jennifer. I had a pleasure of meeting you, I don't know, 5-6 years ago now, when I attended, at that time, CFSI, now the Financial Health Network's a conference. You guys invited me out to speak, and I stayed around late, and I participated in the FinX, which was an awesome experience. In fact, it stuck in my mind so much that I had to bring a FinX to Little Rock. I had to bring it to Little Rock for folks here to see what was happening. And so last year, Southern Bancorp, we sponsored a FinX, the Financial Health Network. Your team came down, and it blew a lot of folks away. We had our mayor there. We had legislators there. We had community activists. We had other banks. It was a wonderful experience. And so before we get started, I want to do this. I want you to tell us a little about the Financial Health Network, and then please tell folks about what the FinX, those who may not have participated in the FinX, tell them what the FinX is all about.
Absolutely. Thanks again for inviting me. And hello, everybody. The Financial Health Network has been around 16 years, and our mission is to improve financial health for all. And the way we do that is by working with companies and organizations who are committed to being part of the solution to financial health for their customers, their employees, and their communities. And we provide them this research and data. We provide them tools and advice. We provide them with innovative ideas and partners, and ultimately a place to come together as a community to learn from each other, to create best practices, and ultimately to improve the financial health of everybody. So one of the ways that we help to educate people who are new to thinking about this issue is something we designed several years ago that we call FinX, which is short for financial experience. It's really an empathy building experience where we put participants in the shoes of an everyday consumer who on her lunch hour needs to get done a series of financial tasks. And we team people up. It's a little bit like the Great Race. We add a little bit of fun to it, but they essentially have to go out into the community and conduct real live financial transactions at a variety of different kinds of providers. And then they come back and debrief the experience. And no matter who you are, no matter how much you know about financial services, even if you've already done your own mystery shopping because you work for a financial services company, we have never done this where someone hasn't just been blown away at how challenging it is in ways that shouldn't be challenging, that it's incredibly frustrating, and it's just incredibly eye-opening what the average person, particularly someone who's underbanked, has to experience every day. And so we were just thrilled to be able to bring that experience to Little Rock, and think that you did it exactly the right way, Darrin. You got everyone involved, from policymakers to your colleagues at the bank, et cetera. And you really made it a broader topic of discussion and shared understanding.
No, it was great. We still have people, Jennifer, that talk about it. We actually did twice. We did 2 days in a row. The first day, we're a CDFI bank. We focus on serving and underbanked people. We thought we knew what we were doing. And I had every one of my board members go through the FinX experience. Every one of them came back blown away with how difficult it is to complete just basic transactions. And we're people who are fully banked. So how much more difficult it's going to be for folks who are underbanked. And so it was eye-opening to our team. And we just can't thank you guys enough for creating that experience. I think it should be taken all across the country, because it is empathy building. And folks who are in these positions, they do struggle. You all also have this financial health score, and you've got a way of measuring the financial health of families. And we partner with you all to really measure the financial health of our own customers at Southern. And we're trying to figure out how we better understand and create products and tools and services necessary to help people increase their financial health. And you guys do a lot of research and have a lot of data. I'd love you to talk a little bit about your health score, how it works, the components that you use, and then talk about what you're seeing happening across the country, where people are, and how their financial health being impacted maybe right now by COVID.
Absolutely. So I think the saying, what gets measured gets managed. And that is a real mantra for us because it's one thing to wave your hands and talk about financial health and how nice it would be. But in order to do that, you've got to understand what it is and how you'd know it if you saw it.
Right.
So we've spent the last many years defining financial health and creating a measurement methodology. For us, financial health is having a day-to-day system that enables you to build resilience and pursue opportunity. And really, that just is a lot of fancy language to say being able to manage the down times and take advantage when times are good. And we think that these kinds of measures are things that everyone needs to do, regardless of their station or situation in life. We all need financial health. It's also not a destination, it's a journey throughout your life. That's the other thing about it that's important to think about. So after a lot of research, we've come up with what we think are the 8 most critical indicators of financial health. They're categorized into 4 buckets: spend, save, borrow, and plan. And in each of those categories, we ask 2 questions. Right now, this is a survey-based tool. So we're asking people to tell us what they think about their own financial lives. So for instance, for spend, we want to know, are you bringing in more than you're spending? And are you paying your bills on time and in full? And for saving, it's, do you have sufficient short-term savings? Do you have sufficient long-term savings? For borrow, it's, do you have a good credit score? And is your debt load manageable? And for plan, it's, do you demonstrate behaviors that are about planning for the future? And do you have sufficient insurance? Those are the main ideas that are embedded in those 8 questions. And we then can give someone a score based on 0 to 100, based on how they answer those questions. Right now, all of those questions are weighted equally. Over the course of time, we imagine that we'll be able to weight them differently when we have more data. And we can also break people into 3 categories: healthy, coping, and vulnerable. And the data itself does that. It just shows you immediately where the breakpoints are. And so we now, for the last 3 years, have been measuring the state of financial health in the United States. We've been giving a representative sample of over 5,500 people this 8-question survey, along with numerous other questions that we ask them. And just a couple of days ago, we released our latest Pulse Trends report. I believe it's in your packet. And what we're seeing is that a majority of people in America are still not financially healthy, despite a wave of stimulus and relief measures that temporarily boosted people's income over the summer. Now, remember, financial health wasn't so great to begin with before COVID. COVID is not helping matters. So as of August of this year, more than 2/3 of Americans were financially coping or financially vulnerable. Among those who are considered coping or vulnerable, 22% said they worried their food would run out. And 26% said they worried about affording their rent or mortgage over the previous 3 months. I mean, 22% worrying their food would run out. That's a massive number of people. Remember, this is a nationally representative survey. And in order to cope with the effects of the ongoing pandemic, more than 1/4 of people who are coping or vulnerable said they would spend down their savings. And more than 1/3 said that they were carrying a balance on their credit cards. So these are very challenging times for people. I also just have to say one more thing. we all know that there are already significant financial health disparities based on a number of key differences. And those have widened by race and income over the last year. And the gender disparities have persisted over the past year. So the proportion of Black people considered financially healthy has not changed significantly from 2019, but it increased by 5 percentage points for white people and 4 percentage points for Latinx people. And the proportion of people with household incomes below 30,000 who are considered financially healthy hasn't changed since 2019, but it increased by 9 percentage points for people with household incomes over 100,000. And I think what this points to is COVID is creating a tale of two Americas, one that we've already been seeing purely from a wealth perspective, but now we're seeing it invade all aspects of life. If you were already doing well before COVID, you're having a great time. The stock market is roaring. You haven't lost any income. Heck, you're spending less now because there's not much else you can do stuck inside your house. But if you've lost a job, or you had a job that wasn't paying very well before, or you got sick with COVID and your insurance didn't cover it, or any of the other challenges that people are facing, you are really feeling quite challenged, especially given the fact that the stimulus is long since ended, and I don't see another one on the horizon.
That's great, Jennifer. I mean, that's such good information, and it's information that our policymakers, both national and federal, need to know. We see it as a CDFI bank. We see it every day. We're seeing exactly what you're saying. And in fact, when we work with your team to really measure the financial health of our customers, we saw those very similar in pre-COVID, and I'm really worried about what they will look like post-COVID. Only a third of our customers that we surveyed that were healthy. So 2/3 were vulnerable or coping, and so that's difficult. I know also at the Financial Health Network, you guys really focus a lot on technology and on Fintech solutions. Can you talk a little bit about some of the Fintech solutions that you guys, maybe a couple of ones that you like, ones that are really helping people maybe to manage and deal and save their money a little better, kind of things that you like and you've seen that would really help, that might help some of our listeners.
Yeah. So the first thing I just have to say is I don't think technology is a panacea. And moreover, COVID and being stuck at home has reminded us that there is still a significant digital divide, and that there are plenty of people who still lack basic access, whether it's because they live in a rural area and there isn't good coverage, or whether it's because they frankly can't afford to have broadband at home. It's still an incredible problem. And, I live here in Chicago, and about 20% of children in Chicago live in homes with the internet. And in some minority neighborhoods, up to half the kids can't get online. And it was a big issue here as it related to virtual schooling. This is a trend we've seen around the country. And it's not about ownership of a device, because like 96% of Americans own a cell phone. Just over 80% own a smartphone. Nearly 75% own a computer. A lot of people have the technology to get to, but they don't have the broadband access. So I think it's really important to just say that out of the gate. Having said that, I do think that there is, that technology can be a really effective tool when it comes to helping people make good decisions about their money and manage their money in real time. And so we have a financial solutions lab, which Darrin, you mentioned. We run it in partnership with JPMorgan Chase and Prudential Financial. And each year we run a cohort of fintech companies through our accelerator. We also have a nonprofit fintech exchange that pairs up fintechs and nonprofits, where we provide grant dollars to facilitate some of those partnerships, where sometimes it's a nonprofit provider that wants to make more available to their clients a tech solution, or in some cases it's the other direction. A fintech wants to take advantage of a nonprofit's counseling or curriculum. And so this year in particular, both of those initiatives have focused on financial health challenges faced by workers and students. And so one example of a company in our accelerator is a company called Summer. Summer helps people with student loans save money by enrolling them in the best repayment and forgiveness programs. If any of you have student debt or have children that you're putting through college, you know that it can be very difficult to figure out all of the different programs one might be eligible for as it relates to paying down your student debt or getting those loans forgiven. The government makes it incredibly difficult. And so since COVID hit in particular, Summer has partnered with several states like Iowa, Pennsylvania, to offer Summer at no charge to residents who filed for unemployment. I mean, because imagine you have no money coming in and you still have student debt. So really excited about what Summer is doing. And then on the similar theme, we just announced a few weeks ago the latest cohort of FinTech nonprofit partnerships. And one that I think is interesting is the one between Neighborhood Trust Financial Partners and a FinTech called AM Money. So AM Money is in the same arena as Summer, student loans, but where Summer is focused on repayment, AM Money is focused on the lending part of the equation, and using different ways of underwriting to make sure that they're giving everyone an opportunity to be able to go to college. And they work very closely with their borrowers, and they've partnered with Neighborhood Trust Financial Partners, who has a great financial coaching tool, digital, called Trust Plus. And AM Money is actually adding the nonprofit's financial coaching tool to its offering. And I love that example because we often think that it's the nonprofit who needs some fintech partner. And in this case, it's actually the other direction, which I particularly like. And just to put some more context around this, because we've been doing this for quite some time now, for about 6 years, we've worked with more than 200 companies and organizations over the last 6 years. And those groups have reached more than 10 million customers with their solutions, more than half of whom are low and moderate income. And by our calculations, those consumers have saved more than $2 billion using these solutions. Cost isn't the only issue, but it can be an issue. And these solutions tend to be more cost effective. So really excited about the work here. And I'm also excited about the energy and enthusiasm that I'm seeing from more entrepreneurs who recognize that financial health is a robust area, that there's a lot of potential business opportunities to be had in solving people's real financial challenges.
Oh, that's great. Jennifer, you and your company, you guys are just a wealth of information and do such good work. We really appreciate it. We at Southern, we benefited from the partnership and relationship with you, is not just in measuring our customer health, but as we're thinking about our digital solutions as well. We've been reaching out to you all. We just appreciate it. So I'm a former legislator, so policy obviously is something I think a lot about. And during my time in the legislature, really kind of focused my work around financial policies that would help underbanked people, low wealth folks. You know, here in Arkansas, we have managed to eradicate storefront payday lending. I wouldn't say that we don't have payday lending going on. We just don't have any storefront payday lenders because of our user provisions in our Constitution that just don't make that business model make sense in Arkansas. But we know folks are struggling, and they're trying to get their hands on sometimes small amounts of money. You know the stats that a large 40% of Americans can't put their hands on $400 without having to sell something. And so I know there are several kind of fintech applications around trying to help people access small amounts of credit. Do you have any recommendations, any thoughts about, or have you seen any really interesting fintech solutions around small dollar borrowing at all?
So actually, I think what I want to highlight is not a fintech solution. I want to highlight Bank of America, because just a couple of weeks ago, Bank of America announced a new product that they'll put in market later this fall that offers from $100 to $500. If you're having a cash flow challenge or you have an emergency, and it'll be paid back in installments over 3 months, and it will be $5 regardless of the amount you borrow. Payday lenders got into business because banks got out of this business.
Right.
And it became too expensive, particularly when you could now give people a credit card, and the underwriting process for a credit card was much cheaper, et cetera. But lots of people who needed that emergency credit couldn't qualify for a credit card.
Sure.
And frankly, we don't tend to talk about the fact that most people are just making the minimum payment on their credit card. So they may be paying on time, but they may be paying for an awfully long time. And so I was heartened when a year or two ago, U.S. Bank announced that they were creating a small dollar loan product, but didn't see any other banks really jumping back in. And to have one of the largest banks in the country make this commitment, and particularly in the midst of the pandemic, when a lot of people have pulled back on lending, I'm hoping is going to send a very strong signal that this is absolutely something that banks are capable of doing. And in order to do it, they cannot judge it purely on a product profitability perspective. They shouldn't lose money on this product, but frankly, they shouldn't need to make a lot of money on this product either, because this is really about demonstrating to your customer that you have their back. And it's about helping give them a little bit of resilience so that when they have a challenge in life, they don't end up in your penalty box, either because with an overdraft, or they've gone negative, you're going to close their account, and then the cycle just starts all over again. This is really about relationship management. It's about loyalty. It's about satisfaction.
Sure.
And so I give Bank of America a lot of credit for their leadership, but this is something that every bank can do. And so, on the fintech side, to be perfectly honest, I'd be happy not to see any more credit solutions. There are plenty out there. I think the big trend in the fintech world is what they're calling buy now, pay later, which is sort of like a cross between a credit card and an installment loan, where you get the credit at checkout, but then have some time to pay it off. So think of Affirm as an example. That's one of the bigger and more successful firms in this space. And while I think there can be some benefit to those products, I also think that for a lot of people, they're using those products to buy those kinds of credit products to buy everyday things. And in a perfect world, credit would be reserved not for the groceries you need tomorrow, but for maybe a bigger purchase that you can't afford all at once, or again, to bridge a cash flow challenge. And so I hope more banks will follow Bank of America's example.
Thank you for sharing that about Bank of America, Jennifer. Now I've got to make a shameless plug for
Please
CDFIs. Clearly at scale, Bank of America can do that. But I'm proud that the CDFI industry, I think we kind of got a resurgence during this pandemic, because particularly with regard to the Paycheck Protection Program and small business lending. So we'll do 7,000 loans a year here at Southern, and probably last year probably 1,200 were less than $1,000. So we've been making $500 loans for a long time. We obviously don't have the scale that Bank of America has, so I'm really glad to see some of the bigger banks really stepping up, who serve so many more customers than CDFIs serve. But the CDFIs industry, banks, credit unions, loan funds, really for some time now, and again, because of the pandemic and our access to really small businesses through the Paycheck Protection Program, it's kind of highlighted the need to have kind of a broad suite of different types of financial institutions, not just all the big banks, because unfortunately those larger banks have abandoned many of the small rural communities that banks like Southern serves. And so in our markets, 16 markets, we're one of the only bank in town, or one of only two in town, and in 6, we're the only one in town. So that solution wouldn't work for everyone. I started about. I'm sorry. Go ahead, Jennifer.
Yeah, let me just say that I appreciate you making that plug, and it's exactly right. And it's one of the challenges that you and I have talked about a lot, is that Southern in particular is a very interesting position, because you're a CDFI, you're also a bank, and you have a real retail business.
Right.
Many CDFIs, even many of the CDFI banks, retail, they don't have much of a retail business for all the right reasons. It's very difficult. I'm not telling you anything you don't know. It's very difficult to run a robust retail business, below a certain size. And so, particularly on the small dollar loan front, it's not for lack of interest or appreciation. For some folks, they just don't have the wherewithal from an institutional perspective. So, folks like you and others do play such an important role there. And you're completely right on the small business and affordable lending side. That's where the CDFIs absolutely, outdo the big banks any day of the week. As someone who's a Shore Bank alum, right? Local presence, deep market knowledge, trumps every day. And you're exactly right. The incredible work that CDFIs did in COVID around PPP sort of put to rest the idea that there's just not enough demand in African American and Latinx communities, and now look at how much money in fees a lot of those big banks earned. Some have said that they're going to use it for philanthropy, et cetera. But there is a real disconnect there.
No, you're right. We actually did 111 million plus in Paycheck Protection loans. And many of the folks that we talked to said they didn't know what they would have done if they didn't have access to these. So I appreciate you my shameless plug for CDFIs. But let me go back. Any thoughts on, so Bank On started really as a municipal movement, right? It started in San Francisco, and it's moved across the country. And so proud that here in Little Rock, our Mayor Frank Scott has adopted the Bank On. He's a partner, the city's a partner, and we're providing financial health education to citizens, to the employees of the city, and trying to find ways to partner. We're looking to try to expand this partnership to other cities and municipalities throughout Arkansas. But from a policy perspective, whether it's on the local level or on the kind of state level, I'm not worried about Congress just yet. Get any ideas, any thoughts on what policymakers can do to really help improve that financial health score that we talked about at the beginning of our conversation?
I'm going to make you answer your own question first at the state level, because I want to hear what you're thinking about for Arkansas, what you're hoping legislators will do, and then I'll chime in after.
Well, of course, I'll tell you that Southern we are unique in that we actually have a policy shop through our nonprofit loan fund. In fact, as a legislator, that's where I first got to know Southern because of the rich and deep work they did in the policy perspective. And we focused our policy work around savings. And so trying to remove barriers from savings and trying to encourage people to save. And so both in Arkansas and Mississippi, we've passed legislation, what we call an add-a-line legislation. So we know that oftentimes for low wealth people, their state and or federal tax return are the largest checks that they'll receive in a period, particularly a federal tax return, particularly if you receive the earned income tax credit. And so we've actually added a second line to the tax form so you can split your refund. You can put it in a transactional account and put it in a savings account. Arkansas was the second state to do it. Mississippi was the third state to do it. We pushed it both in Arkansas and in Mississippi. The first state was California, and it was done in California because of a high divorce rate, not as a tool for savings. So that's one thing that we've done around savings. The other thing that we've been really pushing here in Arkansas, and we've not been successful, but we're not going to give up, and that's to remove the asset limit on TANF benefits. And so unfortunately in Arkansas, we still have a $2,000 asset limit. And if you have more than $2,000 in assets, you're not able to access, a food relief or housing relief. And so we think it's a perverse incentive to help someone move beyond, living on assistance. And so those are two things we've done. And one successful, one we're still working on, but maybe you've seen some other policies across the country that we ought to take a look at to really help people with their financial health.
Yeah. So I did not know that Arkansas had done a split year refund. I remember when my friends at Commonwealth, formerly D2D fund, got the U.S. Treasury to create Form 8888, which allows people to split their refund at the federal level. So I think that's a great idea. We're actually engaged with Commonwealth and with the Common Sense Lab in a partnership with BlackRock around an emergency savings initiative nationally, where we are trying to work with companies, both financial services companies, but also employers, to make small savings opportunities available, because we feel like all of the research demonstrates that low income, low wealth people absolutely have the ability to save. They know it's important and they know how to do it, but often they don't have a mechanism to do it, and they're not offered the opportunity to do it at opportune times. And so we've been working with a payroll company, with UPS, with a couple of financial institutions. In fact, through this initiative, Commonwealth worked with the CFPB to get some clarity around what kind of disclosures folks need to provide in these instances to make it easier. So I would encourage people to check out this initiative. It's the Emergency Savings Initiative, and there's a website for it. But I agree that making small savings easier is a really important thing that we can do. The other interesting thing I've seen is at the federal level, enabling retirement plan providers to add an emergency savings or a short-term savings wallet, if you will, onto your retirement account, so that the savings is happening simultaneously. So for instance, Prudential, I think, was the first to offer a product like this. And if you don't use the savings that's in the short-term pocket, it ultimately just becomes part of your retirement plan. So you don't lose any money. But this is a great way to avoid folks having to take money out of their retirement plans and get the penalty, et cetera, because this money can be accessed. I've seen interesting things at the state level around leveraging 529 accounts, college savings accounts. And then I think the thing that lots of people are talking about and really hopeful that they might play out at the federal level, but a number of states have done work in this regard, are around children's savings accounts or baby bonds. however you want to call them or think about them, but giving children either at birth or when they enter school an account, because all the research shows that no matter how little they actually save in terms of tangible money, it dramatically increases the likelihood that they'll actually go to college and finish college, for that matter, graduate. So finally, I think that something that's been around for a long time, but that not every state has taken advantage yet of, is the EITC, the Earned Income Tax Credit. And particularly as we're seeing a lot of interest in universal guaranteed income kinds of pilots, UBI pilots, we're seeing them crop up in cities all over. In fact, I just interviewed Mayor Melvin Carter from St. Paul, Minnesota for my new podcast, and they just created a new pilot they're going to do around guaranteed basic income, where they're going to have a segment of families and they're going to get a guaranteed amount of money each month. The EITC, in some ways, it's the same thing. It's a negative income tax. And sometimes I think we forget that people know how to manage their money. They just need more of it. And that sometimes the best thing we can do is to, again, provide them just that little bit of resilience and get out of the way.
Yeah, no, that's great. That's great. Those are some good things. I appreciate you bringing up the Earned Income Tax Credit, because we've tried that unsuccessfully several times in Arkansas, and we're going to be pushing it again and hope that we can pass that. The federal Earned Income Tax Credit has been hailed as the one of the best poverty relieving programs, and it has consistently has broad bipartisan support. And I really hope the state of Arkansas and our policymakers will give some thought to that, because it's been such an important program to really lift people out of poverty. Now, they've already given me the warning. We've only got just a few minutes left. Let me just pause here and say, Jennifer, what have I not asked you that you'd like to tell us about? You've got your hands in so many different things. You really got your finger on the pulse of families' financial health and just things that really are beneficial to families. What have I not asked you that you'd like to tell us in Arkansas that would be good for us to know?
So the thing that I've been thinking about a lot since COVID hit is just how much everything is interconnected. Your worker is my renter, is your patient, is her student. We're all touching the same person, but we're only looking at a very particular slice of that person's life. But that's not how we live our lives. We don't live our lives in these in these silos. Our lives are interconnected. And I feel like there's work to be done to create an integrated financial health system that brings to the table not just the banks and the nonprofits and local government like Bancorp has, which is a fantastic place to start, but we need employers at the table. We need healthcare, hospitals and insurers at the table. We need higher ed at the table. Because again, if we really want to be mindful and responsive to the people we're trying to serve, we would be trying to find ways to connect the various pieces of the puzzle that each of us is working on into something that feels more cohesive. So I'm really on a kick about seeing people in 3D. That's how I'm thinking about it. And at the end of the day, I think one way to do that, or one tool that can be helpful in doing that, is agreeing on what everyone's North Star is. And while every sector has got its own goals, right? College, I want to graduate students. Hospitals, I want to make people well. Banks, I want to help people save some money or get a loan, et cetera, et cetera. I feel like if we could all agree that what we really want for people ultimately is to improve their financial health and to ensure that the way in which we're interacting with them on our slice, at a minimum, doesn't harm them financially and maximally would help them, then we each can continue to go about our business, but we would understand that it connects to a broader purpose.
Sure.
And then we could all hold ourselves accountable for it. And so we could really understand ultimately the impact that we're having.
That's great, Jennifer. I like that. Seeing people in 3D. I think that's a good way to frame that. I just want to say thank you. The Financial Health Network is such a rich resource. You guys do such great work. Southern Bancorp appreciates the opportunity to partner with you all and looking to continue to do that and more. And just appreciate you spending time with Arkansas Bank on Plus and our Family Economic Resiliency Summit. Even though it's virtually, you've brought a rich amount of information. And I just want to encourage the listeners to jump on your website and play around. I learn information all the time. And a lot of times I'm asked to speak different places, and I'll use your website quite a bit for research. And I want to encourage not just banks, but corporates to look at partnerships with the Financial Health Network, because as Jennifer said, we need to think about folks in 3D. And I think there's a rich amount of information and wealth that can be gained by partnership with the Financial Health Network. Again, Jennifer, thank you for joining us at this virtual summit, and just appreciate your time.
Thank you so much, Darrin. The feeling is mutual. It's a mutual fan club.
Thank you. Thank you so much.